how much more downside do you think there is in Chinese markets from here?
Well, that's a very good question. I mean, to actually try and put a pin on it is very tough. I mean, you've seen the economic data coming out over the last few months, and it's actually been very tough. You saw the PMI data yesterday. You know, that was significantly worse than people expected. And as you know, that's the 10th month in a row that it's been negative. The real question I think we have right now, it's not so much on the long term, it's more of a focus on the short term, how they're actually managing the market.
Does the Chinese central bank have credibility with the market at the moment? Because there have been suggestions that we will get more easy money. There have been promises about support, and yet we continue to see downside here. And the big looming fear is that a lot of large institutional investors who were persuaded, shall we say, not to sell are coming to the end of that 6-month lockup period and are now likely to start selling down quite aggressively. So does the Chinese central bank have credibility to stem the tide?
Yeah, so there are quite a few questions rolled up in there. The first thing I'd say is that rather than talking about the central bank, I'd focus on the CSRC, which is the securities regulator. And when you look at what's happened recently, you've had the securities regulator change the rules for trading on the stock exchange. What they've done is, as I'm sure you're aware, they've put in a circuit breaker at 5% and at 7%. Yeah, so should the CSI 300 drop by 5%, the market stops trading. If it drops by 7, it stops trading for the entire day. It gets suspended. Now that in itself isn't unusual. You can see that in the US. In the US, the limits are 7, 13, and then 20% before it's fully suspended. The issue I think you have in China is they're trying to impose these rules on an existing framework. So single stock limits currently are at a 10% level. So if a stock drops by 10%, it gets suspended. Well, it doesn't get suspended, it's limit down, so you can only put through buy orders. So in the US, in other markets, what you have is you have these limits to stop periods of exceptional volatility, which I believe makes sense. But what you have in China, because of existing rules, they've had to put those limits too high. So in fact, in almost normal market conditions, if you look at the CSI 300, it's actually dropped by over 5%, more than 100 times in the last 10 years. Not dropped, either moved up or down, because these limits are either on the upside or the downside. And so what you'd see is the market being suspended or going into auction far too many times than compared to normal.
So the